Good afternoon, everybody. Thanks for joining us for a midday review. So I just got my trading view chart up here. Obviously, we'll cover some other stuff, cover some game edge tools we've been watching this morning. Drunken Sailor Range was outlined this morning from our pre-market prep. Pretty much we've, hey, Mr. Hedge Fund. Pretty much we have, tested the Drunken Sailor Range almost 3 times this morning. Obviously, 65.30 is key. I'll pull up our volume command, and we can take a look at that as well as our intraday, minute chart here. So we can take a look at this. All of our charts here, obviously a game edge, are interactive, so which is nice. So you can see the high sensitivity levels here on the gamma, which nice is you can just scroll over. So 48 million there on the Gex positive bar, and then this is positive here also. So yeah, so basically I could just see us chopping back and forth between these two. If we get below this strike here, you can scroll over and see it's 65.30. Then yeah, we could pull back down towards maybe 65.20, and then you see COTMP down there. But right now we're just chopping between those two high sensitivity levels. Let's look at our vol M command here. If anybody has any questions, let me know. Anybody wants to go over single stocks or anything, I'm just going to hang out and we'll just chat a little bit. So thanks everybody again for joining us. So our vol M command, I'll go ahead and pull it up for everybody. This is our live one that just came out. Oops, hold on one second. Let me grab the interactive chart here, which I think is much better. So this configuration is what some of our members refer to as like chopsticks of death or whatever you want to call it. So basically what's happening is, just get you orientated, everybody that's new here, is the call centroid obviously continues to drop, right? This is the mass of market participants where they're transacting prices, right? So this is calls, they continue to drop, right? So this is more about call speculation dropping to the upside than good afternoon, TT. Than the put speculation transacting to the downside, which I think you can see pretty easily, right? This put centroid is not really falling. We're not really making lower lows and lower lows, and we're not transacting lower strikes on volume for the put centroid at the moment, right? No, now this could change in the afternoon, but basically this tells me this is more about calls, the call out of the money call speculation not transacting higher, dropping price, than puts transacting lower, right? So what does that mean? That basically means it's going to be difficult for us to move significantly to the downside. Also going to be difficult for us to move significantly to the upside because we're not seeing out of the money call speculation, right? So basically we call this the chopsticks of death cross pattern. So basically this is a consolidation pattern, and this will continue on this trajectory. Now, we will not end the day with a crossed linear fit line. It'll continue to spread apart and open up, but we'll reach a point where most likely these will converge somewhere probably around 65.40 is kind of what I'm thinking. Unless again we see this call centroid start making higher highs. If this call centroid starts turning up, this is how we use our tools intraday to trade. If that starts turning back to the upside, making higher highs, then out of the money call speculation is coming into the market and most likely will continue to move higher. If this put centroid turns to the downside, again, start making lower lows down towards 6,500, that means out of the money put speculation is starting to ramp up. Now, the other tool we have is our volumetrics, or we have our centroid table. This basically shows the rate of change over time. So as you can see, this call slope, excuse me, this call slope basically has not changed, right? I mean, it went from slightly positive to negative, and then it just continues a little more negative, and then we actually started leveling off, right? So that's really not, again, showing that there's a significant change to the downside. And you see the rate of change, right? Rate of change is basically hovering around 0. So there's really no urgency in any of the call slopes. And now you see the put slope. Obviously, we started fairly positive, but we've dropped that down a little bit. But you see the rate of change is basically hovering around 0, right? It's not any urgency to downside. This was some urgency obviously in the morning session, 11:30 to 11 o'clock, and what happened, right? That was where our highest decline in price occurred, right? So there was some urgency to the downside on puts there. But then now there's no urgency, right? We're in the lunchtime hour. We're running into 1 o'clock Eastern, 12 o'clock Central. So really nothing's changing with the slopes. Now, usually after 1 o'clock, 12:30, 1 o'clock Central Time, we might start seeing some of this change, whether it's to the upside or the downside. But this is a great way visually to look at these slopes and say, basically, it's steady as she goes. No changes are being made to our trajectory of the boat. So if we continue on this trajectory, we'll end, somewhere wherever these linear fit lines tell us we're going to end, right? So again, that's why we watch these slice over slice to see if there's any significant changes, and that's how we use them. And also, we have a volume chart. This is just our volume that just ran. So you can see those spikes in put volume, right? Obviously, those were transacting to the downside, really what we just talked about on that rate of change chart. And then now you see actually the calls start to spike a little bit around the 12:20 hour and then to 1300 hour, right? So just ran at 1 o'clock. So we're seeing some calls open up, but you see this kind of bounces back and forth, right? So again, when we're in this chopstick pattern, it's going to be a choppy price action. We're right around the drunken sailor range, top of the drunken sailor range, 65.50 to the upside. We're kind of stuck. If you think of that, Austin Powers in his cart, he's just kind of bouncing back and forth between the two walls, and that's basically where we're at right now. So how do you trade this? Well, directionally wise, it's going to be a little bit difficult, because we're not getting large moves directional. So that provides you an opportunity to do whatever you want. Option structure into the afternoon, maybe a butterfly, maybe an IC, selling some spreads above where we may not be transacting, which could be 65.50, depending on if we get back up to that level, and then see some sort of rejection. Whatever your preferred method of trading is. So yeah, so. TT, yeah, you can use vol-m on individual tickers. Absolutely. Now, I will say with the caveat is you have to make sure there's enough volume in these tickers, right? I don't want you looking at some penny stock with the vol-m command, and obviously there's no volume in it, so you're not seeing. I'll show you this. I'll show you the SPY if you want. Qs. Yeah, you can use the vol-m command on these tickers, but again, you have to make sure that. Yeah, I'll show gold here in a second. Again, you have to make sure that it has enough volume to be transacting intraday, right, on the option structure to see it actually move, or see the lines actually moving. Because if there's no volume intraday on any of those tickers, options volume, then you're not going to see those charts really do anything. Yeah, let's look at GLD. So GLD, this is for today's expiry, and then Wednesday, and then we actually have a Friday expiry. So GLD's put dominated for today, right at the bottom of transition, COTMP. So I would anticipate this area to hold for today. Let's see what the 12th looks like. So put dominated for GLD. So it looks like some put speculation is actually coming in down towards 330. I know GLD's been on a crazy run. So let's select all. Call dominated on the all, so the top would be 340 would be what we're looking at. That's COTMC, PGEX, COI. Sorry, my windows are open. I think that was a loud car driving by. So, but yeah, so transition area, and then spot or index is down at 330. But GLD's been on a run, but it looks like short term. I would assume some profit taking is probably coming in on GLD. And it looks like not really speculation to the downside. These are in the money puts, so these are close. So basically, what this is exposing is out of the money calls or in the money calls were exposed, or sorry, monetized, and that exposed the in the money puts overhead. So it'd be difficult to move up. So, yep, absolutely. Tesla, Apple. Oh, you want to look on vol-m command? Yeah, let me run those for you. It'll take just a second. We can run all those commands in our Discord. So I'll show you that. So Tesla, $, Apple. All right, give me a minute. Those will pop up. On the targets targets for this week and next week. So that's a very difficult question. I would assume you're asking SPXP, but we don't use gamma targets, right? Gamma is a function of spot price and the option structure, right? So gamma really doesn't. I mean, it does matter, but it that wouldn't be a target. A gamma would not be a target. Delta would be a target. COI, PGEX, and NGEX, those would be targets. But gamma just in general is not necessarily a target, right? So SPXP, you see PGEX 6550, COI 6600, transition levels, PTrans and NTrans, 6505, 6510. Those would need to be stay above to remain bullish. You can look up and down the net GEX column, call dominated gamma condition, so that's supportive. But yeah, 6550 I called out this morning was probably going to be difficult to get over unless we see a large amount of speculation, and that's basically where we stalled at, right? So spot prices ran back up there, 6550 top of DS. So all right, let's get back to TT's Apple example. Hopefully you can see this. I think we're fairly live, TT, so you should hopefully see this in just a second. Maybe 30-second delay, somewhere around in there. So this is the Apple chart. Okay, it looks like we're delayed. Okay, so I don't have the low latency turned on. It looks like our settings. So it may take you a minute to get to this. It looks like. So anyway, I'll just go ahead and start talking about it. So obviously Apple has significant amount of options volume intraday. So this is what Apple looks like for the day. So downtrending call centroid, making lower lows and lower highs. Put centroid fairly flat. So what is that? What's the quick takeaway on that? Basically, that means that there's not a significant amount of put volume transacting lower. And you see our linear fit lines. So basically linear fit lines, if we continue on the trajectory, probably closed around 225 somewhere, right? So that's example on that. So this does work for individual tickers. Obviously a little bit more noisy, but you can see that Apple is not really, put speculation's not really high today. Call centroid's just dropping slightly. So that's why Apple's just pulling back for today. We'll go ahead and look. Oh, sorry, that was Apple. I ran Apple twice. Let me run Tesla. Sorry about that. Hopefully that answered your question, Sai, on gamma for the week. Okay. Okay, yeah, here's Tesla. I'll pull Tesla up for you. There we go. So there's Tesla for today. So obviously, sorry about that. Let me click that. So significant amount of call volume came in, right? But not much put volume. And so, oh wait, that's the volume chart. Okay, sorry about that. Okay, so yes, so this is it. We just we don't have linear fit lines on the Tesla chart, right? Oh wait, no, we do. Hold on. There it goes. It ran. Hold on. Here we go. Sorry about that. Okay, here's Tesla chart. Forgive me. I was doing too many things. Yeah. So here's the Tesla chart with the linear fit lines. Obviously, the call centroid making higher highs and higher lows, and the put centroid, couple put spikes, right? But fairly balanced, and linear fit lines are moving to the upside. So if we continue on this trajectory, I would expect Tesla to continue this way or slightly grind higher unless we see these slopes turn significantly. So that's what I would look at for Tesla. So yeah, yep. So all these work, all these tools work. So there you go. So bounced off the drunken sailor range, 65.30 to the upside, 65.44, 65.50. As I said, we're not really transacting higher than 50 at the moment on the call centroid. So I'll pull our new vol-m command run up, and we can look at it. Here's our new vol-m run. So what you'll see is the linear fit lines actually starting to spread apart a little bit, right? So as I said, that's basically what was going to happen. You see these start to spread apart a little bit, and this will give us a trajectory towards the end of the day. But really, it's as steady as you go as she goes, right? You see the call centroid fairly flat, just downtrending put centroid, not really transacting lower. You see this low is here at 16, and then now we're at 23. So if these were a 20 delta, um, you know, that's basically kind of where we continue to transact, right? So yeah, so yeah, TT, we got a lot of trades. Um, One of our team members trades only spreads. I trade individual equities, P2P basically, P trans to PGEX. So yeah, I can go over PLTR, one of the great stocks stock runs. So you can look at this one, PLTR. This has been on our scan like multiple days. So two ways to trade this. Yeah, exactly. So he uses spreads. I do individual equities. I just trade the stock, just buy common. That way I don't have to mess around with options. Is it the best way? Is it the most capital efficient way? No, but I trade the P trans to PGEX mechanical portfolio also with common stock. And obviously, you've seen the results of our P-Trans to PGEX portfolio. It speaks for itself. So I use P-Trans to PGEX as swing trades also, not in our mechanical portfolio. So PLTR is one of those. You see P-Trans, you see plus GEX. Pretty simple. What I do is I would rather look for it to cross P-Trans, get in. My stop can be 0 GEX or in-trans, so I'm really only risking 3.5 points. And that isn't just an intraday close like back and forth. I want to see it close below that for a significant amount of time, right? Or even for the end of the day. So that's where I would manage my risk. And then as it crosses P-Trans would be an entry point, and then my exit point or profit taking scaling out would be PGEX at 167.50. That's how I would basically trade that. So we run the P-Trans to PGEX scan for the day. A Lab was one of those that was on our scan for this morning. Dropped almost all the way down to P-Trans, and then I know COTMP is here. I haven't updated my script, but there's PGEX at 230 for A Lab. So depending on where you wanted your entry, if you took an entry here, your stop would have been 0 GEX or in-trans, depending on how much you wanted to risk on individual equities, or if you wanted to take directionally or spreads, if you want to sell something below the 0 GEX P-Trans level, you could, depending on, again, what your overall plan was. But that's how I would play it. So this was a scan from this morning. A-Lab was interesting to me because it was very close to P-Trans, so that provided the best risk reward. So yeah, that's basically how I trade the individual equities. And I only trade stocks that are on our P-Trans to PGEX scan, and I only trade if they're close to one of our key levels. That's it. You know, if we're in the middle of P-Trans to plus GEX, I'm not going to enter the trade. I want to have that good risk reward and that good level to trade against to the downside. That if we stay above, we're in a more positive gamma call dominated structure. And that's the easiest way to do it. I know Adobe had a big run up today, or AVGO, sorry, it was AVGO. Yeah, AVGO had a big run up right at PGEX there. So obviously, you know, depending on what your trading plan was, you know, PGEX is going to be difficult to go above and stay above. So, you know, I'm not saying in a bullish environment with MTM or market trend model moving up, whether you want to sell something above 370, but, you know, that could be an option also, because that's usually an area where we see some profit taking and monetization. So you could have also traded it that way. Microsoft held is just oscillating around P-Trans. Everything's sitting at 500, so that's not really a good trade. You want a good risk reward to the upside, so you want to see COI move up to the upside. Yeah, MP, sure. I think it's lower OI though, MTM for overall sentiment before entering a trade. Yeah, well, regular, not necessarily regular TA. It matches our gamma delta levels, right? Our trading view scripts. And yes, you can use supply and demand if you want. Absolutely. I mean, if you look at PLTR on a, let's say like a 65-minute chart, obviously, from a supply and demand standpoint, you can kind of see where supply was 160. Once we cross that, pretty much to the upside, 167.50, right? That 160 matches transition level. That matches the highest sensitivity moving into the call dominated positive gamma environment, right? So that's call speculation to the upside. So it matches pretty much TA levels there, right? It's interesting, where you see these TA levels match on the option structure also, right? But yes, the market trend model, I'll look at it. Market trend model has to be trending to the upside, at least for me above the colored ribbon, and I'd prefer it to be above the shorter term moving averages. But I will take trades, when we're oscillating. But we've made lower lows here on the MTM, but basically we're just going sideways. So we're losing a little bit of momentum to the upside. So you may want to, obviously position size is important and risk management is important. So if you're going in with a higher position size, again, knowing that the MTM is just consolidating, then I would say you'd probably want to drop your position size down, just to manage your risk appropriately, right? So MP, let's look at that one. So it was on the P-Trans to P-Gex scan, but P-Trans kept getting rejected, as you can see here. Or actually, so it crossed very quickly, right? And then just came. So this is the first like 30 minutes, right? So personally for me, I don't take any trades until the opening range is worked itself out, right? And that's just a personal standpoint. There's lots of transactions happening. I want to kind of see those get worked through the system. But yeah, so P-Trans got rejected, right? So that's just a not a trade, right? Large wick to the upside and then complete failure there. And then we drop below N-Trans. So even if you tried to take a long here, which this is a 5-minute chart, I would prefer a close over 5 minutes on P-Trans before trying to get into this. So you really didn't get a close over P-Trans for even 5 minutes. So that tells me that buyers were really not stepping in, call speculators were not stepping in, and your risk reward to the upside was only 1 point. I know it's a $60 stock, but for me, that's really tight. I would rather have P-Trans at 64, P-Gex and COI up towards like 67 or 68. That gives you a better risk reward. So what you can do is you can actually go to our scanner chart or scanner. I think I ran it this morning. Sorry, let me go back for a couple minutes. I'll pull this up for you. Let me see. I think it was ran this morning. Yeah. So I ran this morning, and this is our P-Trans P-Gex scan. You can see MP, right? Risk reward is only 1.56%, right? So, I know A-Lab was only 0.85%, but in the overall realm of things, price-wise, where A-Lab was at. So I'd look at this. Doesn't necessarily tell me not to take trades, but this gives me a little better opportunity. Obviously, Microsoft, not a good risk reward, right? ABGO, good risk reward. It was only 0% though of where the upside and downside was. I'll go ahead and take a look at that, but I prefer to have these a little bit larger. That gives me a better risk reward to the upside. So yeah, so hopefully that helps on that. I'm more into swing trading and wheeling, trying to understand the framework on how you. Thanks for. Yeah, and we have a wheel strategy that we post in our Discord with entries and exits and how we use our scans to find those. Could be, a rejection of P-Trans. You could take that. The main thing is that we were still above 0 gex. I will not short until we go below 0 gex or N-Trans, and you can see what happened there, right? Once we got below 0 gex and N-Trans, obviously we traversed to the downside. You're entering a more negative gamma put dominated structure and environment, so that's conducive of a move down. Now we're bouncing back to the upside. I would assume if we look at SPY, actually SPY and SPX are pulling back, but so I don't short just a P-Trans rejection, right? But yes, we do have a wheel strategy. We're continuing to post that in our Discord. We're trying to make it mechanical, so for traders to take advantage of that. So yeah, so you can pretty much see what's happening, right? I mean, we just talked about the volume command. We talked about no call speculation above 65.50. And you see what we're doing, right? We're just bouncing back and forth between these levels. And I would assume as long as the put centroid doesn't continue to ramp up, we're most likely just going to continue to consolidate and chop around these two levels. I'll pull up the new volume command here. Yeah, so you can see, here we go. Yeah, just quick spike here, but then puts came up under price. So now most likely this is going to come down, maybe down around 65, 30, 32. You see those puts transacting at 65.33 on the last run, so we'll see how that acts. So we're probably going to come down and meet those puts down around 32.33, right? And that would be where I'd anticipate price to stall out, unless we see a large, increase in put speculation to the downside. So weekly income, yeah, we have a lot of people that do Friday expiries basically for swing trading. Absolutely. 2 to 3 day move in the Mag 7 stocks or any of these other stocks that are crossing P trans. Yeah, we have a lot of people that do or the wheel. Yeah, a lot of people do the wheel strategy too, right? I mean, I know that's not necessarily weekly income, but yeah, we have a lot of people do that also. So, yep. All right. Any other questions, comments? So looks like we're coming right back down to 65.32. So we'll look to see if there's any speculation to the downside there. So there's our latest run here on the volume command. So we did have some of those puts transact there. You see 65.16, right? It's a quick spike up. And then some transactions down at 65.16 came in. Again, if this continues on its trajectory, most likely we'll just continue to chop around in this range unless we see this put centroid start traversing down this way, making lower lows. Then that would be out of the money put speculation to really start to ramp up. And then that could be a possibility for us to go lower. But again, as of now, I'd anticipate us to just continue on this trajectory. Again, price could do some discovery down in here, but we'll continue to watch it. So again, just chopping around the top of the drunken sailor range. A lot of these are areas, not absolutes. But if we do see more speculation, I'd continue down towards 25, maybe somewhere around in there. So we'll see how that continues to play out. Obviously, you see over here VWAP. If you're a TA trader, continues to get rejected. So yeah. So what source data, Khalid, for the charts I'm showing? Yeah, TT, thanks for joining us. Yep, Sherman. Yep. What's source data? What I guess what are you asking for as the options or the Gamma Edge stuff? This is all gammaedge.us. You can come join us. Is that what you're asking? Yeah, so gammaedge.us. This is our web app. All of our tools are in our Discord. You can click on the pricing. Come join us. 14-day free trial. All the tools turned on. Sign up for any of the newsletters. Those are all free courses. Yeah, but this is gammaedge.us. CBOE. Yeah. And then we calculate all of our own stuff. Yeah. We have a couple backup data sources too, obviously, if something happens that we check. But yeah. Yeah. I think that's the gold standard, right? I think 65% of people use CBOE and or 50% or something like that for their data sources. So yeah. And then we calculate all the Greeks. Is that what you're asking? Probably. And we have obviously proprietary behind the scenes stuff. So yes, data provider takes care. Yeah, exactly. Yeah. Yep. Data's not cheap for anybody asking. Data is not cheap. Eric, we have 14-day free trial. All the tools turned on. No kind of aggregation of option sales flow. So here's I will give everybody the opinion about flows, right? Absolutely. I see there's a ton of services that provide flows. Absolutely, 100%. But you know, a lot of these services, there's lots of assumptions made about flows, and again, they're not bad at all, right? And they do the best they can. But truly, the only settlement that you know of the flows, you can go in the options chain. You're an individual, you're a retail trader. Unfortunately, we're a business, right? So our data costs more because that's just the way it is. But you're a retail trader, you can go in the options change and you can look at the bid ask and you can try to aggregate the flows, right? But a lot of services just arbitrarily put tags on some of the transactions and they may not be right. And really, you don't know specifically those tags until settlement after 4:30 p.m. And then you have a definitive answer about the flows. That's why we prefer to use volume, right? Of where the volume is being transacted. Oh, so I guess or is that the BTS stuff? I guess I'm not sure exactly what you're asking. Sorry. We do not do aggregations of sales flows. No. Right. Yes. Yeah. Yes. Correct. Oh, I see what you're saying. Yes, absolutely. Yeah. Eric, yes. You can contact Taylor once you get in the Discord. Um, do the 14-day free trial and contact Taylor, and he will get you hooked up. That's iBurn Theta, Taylor. Yeah, exactly. Behind the scenes. Yeah. Yeah, so here's the I mean, here's the volume. I mean, right? That's transacting for the day. This is actual transaction volume, right? Now, again, we can't make assumptions of bought or sold, right? But we can look at where the strikes are at. And I think that's one of the most important things. Where is the mass of market participants transacting strikes, right? I mean, I could tell you all the flows you wanted, but that doesn't help you trade, right? I want to know where the market participants are transacting. Are they transacting lower out of the money puts? Are they transacting higher out of the money calls? Are they transacting at the money, in the money calls, at the money, in the money puts? And what is the general rate of change on that? Is it higher urgency? And what is the slope, right? Are they continuing to transact lower or continue to transact higher? That is the key question to help you figure out where price is going. And most people speculate with out of the money call options, out of the money calls, out of the money puts, and whether that's a 20 delta and then it goes to a 50 delta and it's a monetization. That's what we want to know, right? And then we also have some other charts where you can see the actual strikes and volume, but you can see a spike, right? We're just going back and forth, right? Spike in calls, spike in puts, spike in calls, spike in puts, right? And this is that pattern I'm talking about that we'll just keep going back and forth, right? As long as if we continue on this trajectory. So you see what's happening, right? We came right back down 65.32, basically, somewhere around there, and now we're bouncing off of that. So I wouldn't be surprised if we bounce back up, right? It's just this is just a game of back and forth at the moment, and that pattern that I showed you on the vol M command, that's key to understanding that, right? Now, again, if you're directionally trading, you want to see put speculation lower and lower and lower, right? If you opened up, but that gives you an idea of where you could take profit at because there was really not much speculation lower, we can go to our bar chart, which shows us the change, right? So the slope, the put slope has been coming down slowly, very slowly, but the call slope centroid is basically flat. It's down, then now it's flat, and the rate of change is basically zero. So we're really not changing much. Now, if this if this put slope, these bars keep getting smaller and smaller and smaller to the downside, and then we cross below zero, obviously that's indicating that puts are transacting, out of the money puts are transacting more and more. So I would expect price to head in that direction, right? Remember, price does not go where put speculation is not, right? So if we don't have put speculation to the downside, the price is not going to go that direction, right? And then how does that happen? Well, mechanically, I open a put, my book gets more negative, the dealer book gets more positive. They have to mechanically hedge that intraday, right? So what do? Well, they have to sell because their book is longer in delta. So they have to sell something to, get more negative or more flat or more neutral, right? So that's basically how that works. So the market makers, they're not, again, in the money to they're just providing liquidity, but they have to hedge intraday market participants opening and closing contracts. So that's basically, the whole thing. So yeah, absolutely. Yeah, Eric, no problem. Yeah, appreciate everybody joining us. I'll hang around for just a couple minutes, but yeah, we're just bouncing kind of right back off where we talked about, right? So I would anticipate us to probably go back up in here somewhere. I'm sure we'll show on our volume command that puts were dropping, and most likely probably some monetization when they reach that level. So there you go, right? Put spike, back dropped, and then price will probably traverse back up here somewhere, and we're just chopping back and forth. So that's basically what that intraday command is telling you. So don't get any crazy ideas, directional wise. Plus the volumes really dropped off here, right? So we were back down to 300 contracts. Yeah, we saw a spike of 700 contracts, but this is just, just offsetting some of these other, transactions back and forth. So if we're going to go much lower, what you'd want to see is you want to see a put spike and then a sustained put volume above this green call volume, right? So the puts would continue up here and the calls would continue to drop down around in here. And that would indicate that more puts are being transacted than calls, and that most likely we would continue lower on that trajectory. So, and we could get that. This could morph into that, but we'll just see. I mean, the main takeaway for me was this market trend model was trending down. So that's indicating more stuff is being sold than bought, right? So a little bit of weakness creeping in on the market trend model. So that's pretty much what you're seeing there. So. A TA descending triangle. Yeah, I mean, the main thing I'm watching is obviously the transact. I mean, you could draw something like this, something like this, right? If you wanted to. Yeah. Whoops, sorry about that. Yeah, you could draw something like that. The main thing I'm watching is the volume on the puts being transacted. Is it increasing to the downside? That's the main thing, right? I mean, if it is, then we'll go, price will probably go lower. Again, we talked about a possible pullback to 6,500, right? 6,530, 6,500 was still extremely bullish. Pullback to transition, right? So, yeah. I mean, I think everybody would jump out of their shoes if we pulled back to 6,500, but that's still would be very bullish on pullback to transition. So I think that would actually probably help the overall market after this gap higher. So yeah. All right. Thanks everybody for joining us. Everybody have a great day. Again, check us out on X and YouTube. You'll be notified when we go live. We'll post the post-market recap tonight, where we go through how we use the tools, what they showed, and then kind of what the overview looked like for the day. So, yep. And check out our pre-market prep that was posted this morning if you don't know much about us here at Gamma Edge. And then join us at gammaedge.us. Be happy to have you. Again, 14-day free trial. All the tools turned on. Come in our Discord and check us out. 6,500, yeah. I think, well, our market trend model, back to that, our market trend model, we can scroll back, which is really cool, right? So I'll tell you when we had when we had our ribbon flip, the red cyan, I'll show you guys. This is usually when I get involved in the long market. So here we go. Right there, right? So this is the key point. So this was back in April, right? So this was back in April, and this is great because on our trade station we can scroll all the way back. So watch this. Doom, doom, doom. And then this is our cross, right? Back in April for our market trend model. And then I don't think we've actually looked back since then. So this was May, the beginning of May. And that's when, again, when our market trend model starts indicating, this is when you start getting in motion. And then obviously we've had significant upside since then, since May. And this is how you use our market trend model, right? And you stay long until the red closes back below the cyan. And guess what? We have not had that at all. We've had compression, we've had pullback, but we have not had any cross back to the downside, right? Compression, still continuing to the upside. And here we are today, right? So, and if you go back and look at the SPX in May, if you want to go back that far, which I can, we can show kind of where that was, right? So here was April, right? That's the bottom, right? And we were showing some things changing in the overall market, but here's the beginning of May, right? So if you got involved at 5603 or 5600, somewhere around in there, I think you'd be extremely happy, right? And that's how you use the market trend model, everybody. So there's all the secret sauce about how we get long the market and stay long the market. And obviously now there's pullbacks within these, but that red never crossed back below cyan and continued on the positive slope. So we continue along with our accounts. And then you can see the price range. So roughly around 5,600. So we're up 16.7%. So if you just took, let's just say you took a SPX ETF or anything like that, obviously nothing crazy, right? Nothing with a lot of risk to it, VOO or whatever, you're up 16%. So I think you'd be doing pretty happy and you'd be doing pretty well, right? So that's basically how you use the market trend model. So. And then within those, there's lots of opportunities where the bolded white CT crossed back above the shorter term moving average to do shorter swings. And that's what we do. Yeah, that's what I do, right? I'll take 2x ETFs, when we cross back above those shorter term moving averages, and those are swing trades. Obviously, those are a little bit more actively traded, but market trend model matching move to the upside when you get long, right? Obviously, everybody wants to catch the bottom. Yeah, absolutely. If you caught the bottom, then, you would have a much higher, return, right? Okay, so you'd be up, 30%, but that's not conducive of catching the exact bottom, right? Because you don't know, you have no clue what's going on here, right? So I'd prefer to wait until our market trend model and I'd catch the meat of the move. So I've been in the meat of the move, which is 16%. So pretty happy with that. I think if you did that every year, you'd beat the S&P pretty handily, right? And you'd be pretty happy. So, all right, thanks everybody. Make it a great day. We'll see you later. Yeah, 80%. Yeah, catching the meat of the move is what we want. So, all right, everybody.